Treasury yields are falling fast in today's bond market report. Sean DranField, CEO of PT Asset Management, PTAM, is here to bring us up to date. Hello to you, Sean. Perfect timing to have you here. The 10-year yield has fallen dramatically in the past few trading sessions from around 4.5% to now 4.29% at last check. What's happening behind the scenes?
Well, Angie, thank you very much for having me on your show today. It's a pleasure to talk with you. It's really interesting how the market sort of responds to the sort of information du jour. And, more recently, 10-year Treasury yields have been falling, but only, a few weeks ago, we had upward pressure on rates. So what's typically going on is the market is responding to what they think may be happening in the economy.
What is the bond market signaling to you about the economy?
The market is worried that cuts at the federal level, cuts at the individual private sector level may have downward pressure on the economy as a result of increased unemployment. And typically when that happens, bond yields fall and the equity market typically declines a little bit as well.
What will this mean for investors? A shift perhaps into stocks or away from stocks?
Well, if the market believes that there's a downward shift on the economy and there's increased unemployment, then generally speaking, that may have a negative impact on the stock market. And frankly, when you think about stock market investors, there are different types of stock market investors. There are value investors, there are growth investors, there are passive index investors, and they all tend to operate differently depending on what is going on in the economy.
Thank you for that bond market update, Sean.
Angie, thank you very much for having me on your show today. I really appreciate your time.